Give it up for Danielle DiMartino.
Danielle DiMartino.
Danielle DiMartino Booth.
All right, we have a guest in studio we want to bring in and talk a little bit more about the markets. Danielle DiMartino Booth, CEO and Chief Strategist at Quill Intelligence, former advisor to the president of the Dallas Fed here in our Bloomberg Interactive Brokers studio. A little bit out of breath, just trying to keep up. How are you, and what are you thinking about the news today and what fundamentally has changed, if anything, in terms of the market?
Ooh, fundamentally is a great big word. And I'm not so sure that the bond market has the answer to that question. The stock market seems like it's already given you an answer, but we're still up on the benchmark 10-year yield. We're up about 4 basis points on the day. It crossed over the 450 line in overnight trading. We're seeing continued unwind of the basis trade, obviously, in overnight trading. I'm not gonna stop watching the markets at the Asian Open. I'll probably still wake up in the middle of the night to see how the bond market is faring. And we have no idea. Your next guest is going to be able to tell you a lot better than I can because he's the master of the China Beige Book. But we have no idea if this is the art of the deal or the art of playground fighting, and China's going to come back with yet more retaliatory measures of their own. We don't know. This is just going to keep ramping up.
So I want to get to China in a second, but before we get there, you brought up the bond market and the equity market. Who's right in your view?
Gosh, I mean, look, we're coming into earnings season, right? Delta was obviously battening down the hatches as the first example. Do we really think that with banks tightening lending standards, right? The Dallas Federal Reserve released a survey just a few days ago that said that loan demand had already declined. Lending standards had already tightened prior to April the 2nd. So are banks going to pull back on any plans that they had due to this uncertainty because of one announcement? And I think we'll learn a lot more from corporate America.
Yeah, that's what everybody keeps saying. We hear that from Sheena Martin Adams. I mean, we've heard that from everyone. Like, okay, earnings are starting right now. We heard from Delta today. Friday, we'll hear from some of the big banks, including JP Morgan Chase. What do you want to hear from these companies? Like, what is the question that you need to have answered?
I want to know if they're comfortable with where their margins are going forward, or if they feel that they're going to have to continue to preemptively cut costs and continue to push through, as we saw today with the newly found group that I can't even think of the name that now owns JCPenney and Brooks Brothers. They just pushed through a 9% layoff announcement today. I want to know if the margins are protected enough, or if they're going to continue to react by continuing to cut costs. We've seen corporate bankruptcies up 20% this year through March. That has nothing to do with this tariff terror, as I like to call it.
You're talking about Catalyst Brands.
I'm talking about Catalyst Brand. Yes, that came across the terminal this afternoon.
I'm thinking you go back and you put out a new report from QI Research in the morning. And is it a case of, do you say things have changed, dramatically, or do you say, hey, folks, again, right, there's worries in the bond market. Like, this is something that necessarily has not changed.
Right. And, we had the probability of a Fed rate cut in May came off quite a bit today, but there's still a lot of...
And Fed speakers are saying differently. They're still on inflation watch.
They are still on inflation watch, but I can guarantee
you don't buy it?
They've been on liquidity watch for the last 72 hours because, remember, above all else, above both the inflation and employment mandate, they are the lender of last resort.
Right.
And I think that it has been the moves in the bond market, the moves in bond market volatility, the moves in investment grade spreads and high yield spreads. These are the things that really are going to spook the Fed, and they have to start paying attention to their employment mandate.
Do you buy, and I have to find my notes here.
She's scrolling, Carol's scrolling.
I'm sorry. It's been one of those days where you have to kind of scroll your script back and forth. U.S. Treasury Secretary Scott Bessent earlier downplayed the recent sell-off in U.S. Treasuries. He attributed it to a normal deleveraging process in the bond market. Is that what we were seeing, was a normal deleveraging process in the bond market? He's someone who very much understands the financial markets. How do you see it? You also understand the financial markets and have seen a fair amount of cycles, right? Was that a normal deleveraging process?
Well, when you've got the owner of $760 billion of your U.S. Treasuries under attack, i.e. China, the answer is I don't know, and I don't think he can know either. So it really, the jury's out. Again, just because it's only theoretically China in the crosshairs, that does not take away the fact that tariffs remain in place.
We still have a 10% tariff.
Exactly. And we still don't know what the ripple effects are going to be across the rest of Asia and other large holders of our treasuries, and how this is going to play out in the bond market.
You know what's terrifying is I feel like for years we have had conversations. I've certainly had conversations with my husband, but it's like, what if all of a sudden China says, we're not going to buy your treasuries? Or what if not?
Or Japan.
Or Japan, right? And
that's right.
I'm not going to say that's exactly what's happening, but it feels like but there is some of this happening, right?
There's some of it happening. And right now, the United States Treasury market is not being treated as its old safe haven self. And it's supposedly the world's risk-free asset.
Rule of law, safe haven,
all of those
trustworthy,
things.
Right?
And, I had somebody in my Bloomberg chat room today come out and say, if it was me and I was a credit rating agency, I would still downgrade the sovereign debt of the United States because of this crazy behavior, because it is so unsettling. It foments so much uncertainty. Even in the hard data, as far as the Federal Reserve is concerned going forward, we haven't even seen a scintilla of evidence of the 80,000 people who took the buyout from the federal government, and or all of the layoffs and closures that have followed this. And we still have we still have an impaired household balance sheet on top of all that.
Where does that show up? You cited data right there, but where are we going to start to see cracks form? It sounds like you're a little concerned.
I'm definitely concerned. We're not only up 20% year over year with corporate bankruptcies, we're up 15% year over year with household bankruptcies. So we're starting to see that unravel as well. I don't think that earlier today, Jamie Dimon said that he expected increased defaults going forward, and magically they disappeared with the wave of one announcement. It doesn't work that way. When credit markets begin to come unglued, and we have not seen, the insurance to protect against a default in investment grade. It came down quite a bit today, but it certainly didn't rally like the stock market. So we have to be cognizant of this massive leveraging up across corporate America, across household balance sheets. The New York Fed told us 9.7 million student loan borrowers are at risk of having their FICO scores fall. There are a lot of things going on right now amidst, again, continued cost cutting in corporate America. I continue to go back to that because it is their obligation. It's their obligation to shareholders, or it's their obligation to their family if they run a dry cleaning company, to make sure that they shore up their margins and stay in business.
Everybody's looking at their balance sheets right now.
Absolutely.
Right?
And rightly so.
Exactly. So, Danielle, do you then see that, 90-day pause, 90-day extension? As you said, there's still 10% tariffs out there. But so are we in limbo potentially for another 90 days unless something else comes up?
So I think we're in relief, and then I think that relief is going to dissipate fairly quickly when we realize how much we still don't know. We don't. I mean, you still hear Treasury Secretary Bessent talking tough about Canada. We don't know what's going to happen in Mexico, but by everything we're seeing from those two countries' PMIs, they're in recession.
Right.
So our neighbor to the north and our neighbor to the south are both in recession. I'm from the great state of Texas. If Mexico's in recession, Texas is in recession. I guarantee you, because we're the biggest exporting state. And there's a ton of uncertainty that continues to weigh on especially the auto sector, but also lumber. Mm-hmm. We need Canada's heavy sweet crude because our refineries don't refine what we pull out of the ground.
Right.
So we need for that trade to continue, and we need resolution closer to home first, I would say.
So if you were advising folks in the White House right now on economic policy, how would you advise them?
I would say to stop saying that this is all negotiations. Because if it's negotiations, it's certainly not how negotiations are done among adults. We have to recognize who our economic allies are. And we need to forge relationships going for, if China is the sworn enemy, so be it. But why should there necessarily need to be collateral damage in the form of the layoffs that we saw come out of Canada last week? Why? So harm thy neighbor. No, I don't think that's how it's done. I think that we need to have a little bit, I'm going to say this out loud, a little bit more Bessent and a little bit less Navarro.
Is that likely? Do you think based on what we got?
Oh, I do think Bessent has more of President Trump's ear. He does, because I think Bessent's initial wanting to take a slower approach, wanting to have more carrot, less stick, wanting to provide in numerous interviews that he did prior to being confirmed, saying we need to give American corporations time. If we want for them to reshore, we need to give them time. And for heaven's sake, we can't beat them over the head for friend shoring because it's what they were told to do. So you can't invest billions of dollars in Mexican auto plants and then be told that that's, oh, sorry, write it off, it's a sunk cost. It doesn't work that way.
It's interesting because I think I'm trying to remember who said that to us. Was it maybe it was Josh Wingrove who said that? I think Bessent and Lutnick were in the Oval Office or in the room when the president put out that social media post talking about the 90-day pause. All right, so walk us through, I don't know, the next couple of days. Like, how are you thinking about what's on your radar? And
I'm back to being data dependent. I really am.
What data?
Right now,
just U.S. economic.
Right now, weekly jobless claims, and you know what? Not the CPI, but the PPI. I want to know how much input costs are rising, and therefore how much margins are at risk. Because either you pass those higher costs through, or you are post-serial and you're closing 2 plants down, which was announced earlier today because Americans are only going to, you can't squeeze blood from a rock. If their budget is their budget and their income is their income. You know, this is why, you know, we found out just a few weeks ago that 17% of existing home sales in 2024 were to multi-generational households.
Right.
Because people are doing what they can to live within their budgets, even if it's trading down to a generic brand and you can no longer buy that Post box that you prefer to buy. Life is life. We have to live within our budgets.
I think, you know, and we're going to be talking about China in a second. I said we'd come back to China after we talked with you a little bit. I think that's still, for a lot of investors and for a lot of observers, the big question mark.
Well, it certainly is. I mean, you know, we announced that they were a currency manipulator. They might or might not have challenges with trying to prevent flight out of the country.
So I'll ask you the same question I asked Joe Weisenthal earlier, which is, what's the off-ramp or the de-escalation for China? Because every day it just seems like more tit for tat, more retaliatory tariffs, and more tariffs being imposed.
It's a dangerous game of chicken right now.
It really is. And my grandmother, DiMartino, from Connecticut, may she rest in peace, would say that you were dealing with 2 calabreses, 2 men with very thick heads and huge egos. And that's why, again, my greatest concern, why I'll be watching Asia, why I'll be watching, because, you know, the offshore yuan was up about a 0.5 percentage point before this announcement closed down. I'll be watching that peg set. I'll be watching to see if we're going to have a continued escalation, because you know what? The last time we escalated, they went right back at us.
What do you make of when the president says China doesn't know how to go about it? China wants to make a deal. It doesn't know how to go about it.
Great. So you basically stick a fork in the eye of somebody who doesn't want to lose face. I mean,
what do you mean?
Well, it's all about losing face.
Oh, okay.
So, and by the way,
so was retaliation by China losing? Was it?
No,
is that
was keeping face. But that's
for China.
Again, but for China, yes.
But do you think the president was surprised by that? I mean, I know we're just kind of. Or do you think he expected it in terms of this game back and forth?
I certainly don't think he should have been surprised by it. But then we re-ramped it up today.
Yeah.
Now it's 125%. At some point, regardless of what happens with China's neighbors, if you take the Chinese economy down to its knees, it will affect its neighbors' economies as well.
Whew. Okay. And we're going to get into the Chinese economy in just a moment. Thank you so much. Such a pleasure. Danielle DiMartino Booth, CEO and Chief Strategist of QI Research. QI Research,
QI
right?
Research, yes.
QI Research, former advisor, as we mentioned earlier, to the president of the Dallas Fed. Stuff coming fast and furious. Thank you so much, Danielle. We really appreciate it.
Thank you for having me.
Hey, stuff is coming fast and furious. Fortunately, we got